huge mistake I made with ELF. Here's the thing with ELF. As I bought that stock, which I started accumulating shares of ELF, it was probably, if I recall, it was very early 2019, either late 2018 or very early 2019. Started accumulating shares of stock. And between my different accounts, at the peak, I owned probably close to 10,000 shares of ELF, right? Here's the thing. Fundamentals kept getting better and better for ELF as time goes along. And what did I do? Instead of buying more shares, I went ahead and started selling shares. But the fundamentals were getting better. So in reality, what I should have been doing with ELF, minimum I should have been holding, because the fundamentals was getting better and better, revenue, margins, profitability, cash flow, everything was getting better and better. At the least, I should have held every share I had. Or what I really should have been doing, I should have been buying more shares instead of worrying about selling. When the fundamentals are getting better and better and better, it makes sense to buy more shares, or at least just hold, but don't sell. Okay, if the fundamentals are getting worse and worse, that's a fair play. I could sell out of the stock, right? I'm like, oh, revenues are starting to go down. Oh, margins are starting to go down. Business is deteriorating. Okay, but when things are just getting better and better and better, it doesn't make sense to sell out of the majority of your shares, right? And a good example of a stock went bad where the fundamentals kept getting worse and I kept buying it just because it got cheaper was obviously the Chef, right? And that's a huge, huge mistake I made there. Huge financial mistake, right? Because that business just kept getting worse and I just kept buying shares. If the business kept getting better, fair play, and the stock's cheaper, you can buy more shares. But when it just keeps getting worse, no. It doesn't matter if the stock's down a bunch. It doesn't matter how attractive the pricing is. If the fundamentals are just getting worse, you got to cut that baby. You got to cut that baby and say, so long, okay? You give it a few quarters. If after a few quarters it's not working out, and the fundamentals are just getting worse, there's a big difference between the fundamentals of a business and a stock price of a business, okay? That's the important thing to remember. Palantir stock, PLTR, the ultimate company that's at the cross sections of data and artificial intelligence. A company that's been working on their products for way before everybody started talking about AI here recently, okay? And basically, to put Palantir the simplest way possible, okay, this is a company that if you were a business, large corporation, if you are a government entity, military, they're going to help you make much better decisions, okay? They're going to help you make much, much better decisions. And they're going to do that through all the different softwares and programs and using your data to make these much better decisions. So ultimately, whatever you spend on Palantir is a small amount compared to what you get out of value out of their products overall. And they have several different products in the market, and don't be surprised if they launch several other new products over future years. And I have a pretty decent sized position in this. This isn't the only portfolio I own this stock in, but this is a public count. This is the one I have the majority of my shares in. 5,500 shares in this particular portfolio. And so far we're up $41,000. I think that's a small amount of money from what will be up long term in this one. Now, when it comes to Palantir, the stock price has done tremendous this year, okay? So a lot of people look at this and are like, this is ridiculous. Is this stock a bubble? Is this stock destined to crash? And those sorts of things, okay? You've got to take a lot of things into factor, way more than just what a stock is up or down year to date to try to figure out if a stock is a deal or not a deal, right? First thing to understand about Palantir, we went into 2023 extremely undervalued on Palantir stock. This stock sold off ridiculously hard. We're talking about 70% plus sell-off. It was way overdone, and this is what happens in the market. You have stocks that get way overvalued sometimes and way undervalued, and Palantir went into this year extremely undervalued, so it was due for a big bounce back, okay? Second thing is, the company just got to profitability, which is a game changer for their business model. Everybody looked at Palantir for the longest time like, they're never going to get profitable. This is never going to be a profitable company. Well, they've done it. And the CARP basically says from here on out, we're going to be good as far as profitability goes. So that is absolutely massive. That's a game changer. When you flip from being a money-losing company to now you're a money-making company, it takes so much risk out of that stock that you usually get a massive upside. So that's huge, okay? Third thing is, now they're talking about S&P 500 inclusion possible at the end of this year or in 2024. That's huge. Whenever you have a company that's getting close to getting in the S&P 500, usually you have a lot of investors that start to pour in money. Obviously, it starts to build momentum, understanding that once it gets in the S&P 500, you have a massive amount of funds that have to buy that stock over the next 6 to 12 months once it gets into the S&P 500, okay? That's a game changer for Palantir stock price. And then on top of that, a fourth thing, if that wasn't all enough, okay? You have AI interest boom right now. Alex Karp, the CEO of the company, says they're getting as many inbound calls in a month they would usually get in a year, okay? It's ridiculous. So everybody wants to know about Palantir's products now at this point in time. And don't be surprised if you see a ridiculous amount of deals signed for Palantir over the next several quarters and several years, okay? And we're already starting to see a lot of those in press releases and whatnot. So they have 4 insane things going for them all this year, okay? And that's how you get this stock up 154%. I'm not so convinced this stock's even done this year. I don't be surprised at all if this stock doesn't end the year somewhere between $20 and $30 a share by the year end, okay? It is a tremendous runner. Now, in terms of Palantir, their balance sheet is very pristine. This is a company with cash and cash equivalents of over $1.2 billion as of the latest quarter, marketable securities of $1.6 billion, total assets of almost $3.7 billion of total assets, and they have total liabilities of only $879 million. Their cash alone is way more than their entire total liabilities. Let that sink in for a moment. Anybody that knows anything about balance sheets is going to say, oh, that's extraordinarily great. When you have more in just cash than you do in total liabilities, that's ridiculous. Very few companies in the world that are public companies can say they've got more in cash than they do in total liabilities. That's ridiculous, okay? Total stockholder equity on this company of almost $3 billion, about $2.7 billion. Don't be surprised if it's $3 billion by year end, okay? Now, the company's about to go through a complete re-rating of this stock that's coming, okay? Analysts have all their projections far too low in regards to Palantir, and don't be surprised at all if you see the entire analyst community raise their EPS targets massively over the next year, their revenue targets exponentially over the next couple of years. Analysts are way lowballing all their numbers, in my opinion, and they're just waiting for basically Palantir and Alex Karp to give them the go on, like, we're getting back to this sort of growth rate, and this is what we're comfortable with moving forward at this point in time, okay? So complete re-rating coming in the stock. Alex Karp has led this company since he founded it with Peter Thiel back in 2004, so nearly 20 years. They've been a public company for probably 3 years now at this point in time. Yeah, around 3 years. So he's been a public company CEO for several years. He's been leading this company for nearly 20 years and built it into what it is today, right? Which is a $30 billion plus market cap on this company. So Palantir meets all my criterias, and that is why I absolutely love Palantir stock for the next, I would say, at least 5 years, okay? The thing that frustrates me with a lot of these Wall Streeters, they say these sorts of comments, right? You know, it's all going to crash, or these stocks are ridiculous right now. What are you basing it off of? Are you basing it off of fundamentals of companies? Fundamentals meaning revenues, future projected out revenues, future projected out margins for these sorts of products, net income? Are we saying because the stock price has gone up a lot? You know, be very specific, because it's very important. So viewers can have context of what you're really meaning there in terms of what's ridiculous, right? And there's a scenario where NVIDIA goes to $1,500 over the next few years, and then it crashes down to $700, right? Does that mean that Dan Nathan was right because then the stock crashed? Like, these are things we all have to consider, right? I mean, there's been a lot of bears in the market saying NVIDIA was overvalued and deserved to crash when it went to 150. And then when it went to 200, and then when it went to 250 and 300, now the stock's 400 plus. I mean, are they going to be saying the same thing when it's 800? Probably. 1,000? 1,500? You know what I mean? And so at some point in time, you know, you have to either admit defeat there, or you have to change your stance. Kind of one of the two. Or you can stay with it and stay with the conviction, but, you know, as things tick along and business builds, it gets harder to make that prediction again and again and again, right? No different than the guy that was making the prediction of Tesla was going to go to $60. He was saying Tesla would be at $60 right now. Tesla's at like $260 right now. So, you know,